a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Managed Futures ETFs. These are hedge fund-like strategies that have done quite well in the first quarter. So let's go to some slides and learn more about these ETFs. So, as I mentioned, these are hedge fund-like strategies. They used futures contracts to follow market trends. So, hedge funds in general, they remain the domain of ultra-rich investors, but there are many ETFs that offer these hedge fund-like strategies in liquid, low-cost wrappers of ETFs. There are many different hedge fund-like strategies. So today we are focusing on managed futures ETFs, which seek to replicate trades of computer-driven market trend following hedge funds, quant hedge funds, which are also popularly known as CTAs. So these commodity trading advisors have been using these computer-driven trend-following strategies for decades. So in 2022, these managed futures ETFs were superstars. That was a brutal year for stocks, bonds, and many other asset classes. And these managed futures ETFs, these were the best performers, among the best performers this year. They struggled last year because last year was such a great year for equities. This year, in the first quarter, even though equities did quite well, these managed futures ETFs, many of them, they managed to outperform the S&P 500 index. And there was an article in the Financial Times recently which followed the performances of these managed futures strategies, and they pointed out that the main reason why they did so well in the first quarter was because of their long positions in cocoa futures and their short positions in Japanese yen. So we know that cocoa prices have surged this year. They have almost tripled year to date. Sorry, chocolate lovers. And Japanese yen has plunged to its 34-year low against the dollar. So because of those kind of strategies, because these managed futures were generally long cocoa futures and short Japanese yen futures, so that is why they did pretty well. And in general, the best argument for holding these strategies in a portfolio is that they generally have low correlations to other popular asset classes, particularly stocks and bonds. And in general, the correlation between stocks and bonds has been increasing. So bonds are not providing diversification benefits that they were providing in earlier decades, because they now move mostly in the same directions. So if you're looking for some diversification benefits, diversifying strategies in your portfolio, then these managed futures are worth a look. So the first ETF that I'm highlighting is the most popular managed futures strategy ETF, the DBMF. This follows the performance of a group of CTA hedge funds actively managed. In fact, all three that we are talking about today are actively managed because of very specialized strategies. And this has over $1 billion in assets and charges 85 basis points. So let's learn more about this ETF by going to the quote page on Zacks.com. I had done a podcast with the manager Andrew Pierre some time back. You can listen to that podcast using the link. You can go to the web page for the ETFs. As I mentioned, this uses long and short positions in derivatives, primarily futures contracts and forward contracts, across a broad asset classes of equities, fixed income, currencies, commodities, everything. If you want to look at the current holdings, these are the latest holdings for this particular ETF. So you will see that it is still short Japanese yen, it is long crude oil futures, long uh, copper futures as well, long gold, and you can look at other holdings that it is employing currently. The second ETF that I'm highlighting is by Simplify. It is called Simplify Managed Futures Strategy ETF CTA. So this invests primarily in US and Canadian commodities and interest rate futures, not equity futures. The main aim is to produce absolute returns with low correlations to stocks. This has 184 million in assets and an expense ratio of 78 basis points. Again, let's learn more about this ETF by going to the code page on Zacks.com and using the link to go to the web page. So this, as I mentioned, this uses long and short futures position, US and Canadian commodities and rates, and not equities, because it aims to produce returns that have low correlations to equities. And these are the current holdings for this particular ETF. So long wheat futures, long live cattle, natural gas, etc. And the third ETF that I'm highlighting is again slightly different. So this provides exposure to large cap US equities and then also long short positions in managed futures. So it provides exposure to 25 global futures contracts, and using those statistical techniques, this has an expense ratio of 1.04% and currently has 121 million in assets. Again, let's learn more about going to the code page on Zacks.com and using the link. You can go here. So this is what it provides to do: long-term capital appreciation by investing in two complementary investment strategies, US equity strategies and a managed future strategy. So using leverage, for every $1 invest, this will provide $1 of exposure to US equities and $1 of exposure to its managed future strategy. And the managed future strategy will invest across commodities, currencies, bonds, equities, etc. via managed futures. If you look at the holdings, these are the holdings currently. So IVV is for equity exposure, US equity exposure, and E-mini as well. And then it has exposure to other commodities and interest rates. So you see that long positions in gold and copper, and then other interest rate futures. On the next slide, I have comparative performance versus the S&P 500 index. So you will see that all three have outperformed the S&P 500 index significantly year to date. RSST is the best performer so far, but all others, all three have returns between 17% and 20% versus S&P 500 index's return of about 8% year to date. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I will see you next week.